everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. All right, welcome back. Mr. Amolegbe, Mr. Olatunde Amolegbe is joining me right now. He is the Managing Director and Chief Executive Officer at Stephen Asset Management Limited. He is also the past president of the CIS, that's Chartered Institute of Stockbrokers. Mr. Amolegbe, good morning and welcome to the program.
Good morning, Nancy. My pleasure to be here.
Fantastic. Let's get started. The market bled last week, in the last few days. Tell us why this bleeding is, even though I have attributed slightly to it in my opening. But why do your organization, because I read your report, which you sent to me on what you think about what happened last week, and I've also spoken to a few market people. Why do you think that what happened was majorly local?
Well, I mean, you know, you need to dimension these things properly. The chances are that more often than not, people tend to attribute market movement or price movements to what is happening at the present. At the moment, you know, there's all this talk of Trump effect, talk of tax reform effect and all whatnot. I will not say that those don't have an impact on it, but as you attributed in your opening, there are other factors. Factors such as profit taking. We can't lose sight of the fact that the market has been on the tier this year. We are close to 50% up. So, and you know, for the month of October, we were almost 10% up, particularly due to gains recorded because of the very, very good earnings report we got for the third quarter. So it is natural for investors to want to take profits. And I think that is part of what we are seeing at the moment. All right? That's what we will attribute it to. So that's why you see that a lot of the profit taking you are seeing is actually coming from locals. If the drop we are witnessing is attributable to foreign investors, then yes, one can pin it to maybe the impact of Trump effect. But we in our own analysis believe that what we are seeing now is more from the impact of the behaviors of local investors who have made money in the market and think that they should take some of the profit off the table. You have also alluded to the fact that we are moving towards the end of the year. That is a period where local institutional investors typically will do some rebalancing of their portfolios. So asset managers, PFAs, and the likes will do portfolio rebalancing. We are seeing some of them. It's very possible that we are seeing some of that starting a little bit earlier this year than it will probably start. And of course, again, that will also be attributed to the fact that the market has seen significant gains. Now, that does not mean that some investors are also not factoring the fact that, you know, Nigeria has now been, you know, classified as CPC by Trump, and also the uncertainties surrounding the increase in capital gain tax and how it's going to be implemented. But for us, I think that is more those issues will come up maybe much later, not at the moment. So we feel that, you know, for now, what you are seeing is the normal, you know, market cycle. There have been gains. There will be losses coming from portfolio rebalancing and capital and you know, profit taking. So
okay.
Where we land is the fact that this also provides an opportunity for entry for people that are not in the market, for them to come into the market at prices that are relatively cheaper than they would have come in maybe 2 or 3 months ago. So for us, it's normal market cycle. Not much to worry about at the moment in terms of, you know, long-term market impact from some of those macroeconomic events we are seeing.
Okay, so Mr. Amolegbe, what you're saying that we saw last week is merely like a headline risk instead of perhaps like a structural driver. How about,
no.
So you're saying even if it will affect it, perhaps not now, but what we saw in the last few days is just headlines, driving it.
Yes.
Okay, but
yes.
Let's take a look at the introduction of the capital gains tax, which will take effect. And in the next few weeks, let me say, because we are close to 30 December already, Nigerians are gearing for that already. And we know the posture of the market in December. If we take a look at the capital gains tax that will come into effect, do you expect to see like a kind of liquidity vacuum in December, anticipating what the effect will be come January next year as it is? Yes.
There's no doubt that we are seeing some sort of uncertainty coming from the likely impact of the capital gain tax. I mean, any increase in taxes on market activity will give investors pause. I think this is been accentuated a little bit because investors aren't even clear as to how it's going to be, how that capital gain tax is going to be implemented. The committee has mentioned the fact that there's a 150 million naira rebate, i.e., to say that if your gain is below 150 million naira, you will probably not suffer that capital gain tax. But the truth is that there's still a lot of questions that have been asked of us as operators by investors, which we expect that the committee will ultimately answer. My hope is that those questions are resolved, before we even talk about implementing those capital gain tax. The truth of the matter is that any tax of any kind, all right, while it is good for the fiscal position of the country, will always have a negative impact on the returns of investors. And investors want to be sure that at the end of the day, if that is going to happen, are they covered in terms of the fundamental of the market? Would the returns they expect from the markets be able to provide them the coverage they expect, such that in the implementation of that capital gain tax does not lead to them making losses in the marketplace? So my hope is that the committee and all the people responsible for implementing that capital gain tax, continue to answer those questions that keep coming up before we get to the point of implementation. But there's no doubt that those questions are being asked at this moment.
Mr. Amolegbe, for this capital gains tax, it's going to be implemented on profits, of course, above 150 million naira. What is the ratio of people, local investors in the market? Okay, let me not even say local investors. What is the ratio of investors in the market that make 150 million naira in dividends? So will it have that pressure that we expect, or will it discourage? Let me even put it that way. Will it discourage people that make over 150 million naira from the market? What's the ratio?
Okay, I will not say that I have the statistics at the tip of my tongue, but from just my experience in this market, years of experience in this market, I will say that the bulk, maybe the majority of retail investors will probably end up escaping this capital gain tax, because most of them
many of us don't make up to 150 million naira. It depends on how many shares. Perhaps institutional investors.
So, yes. However, we must also realize that the foreign investors, the asset managers, who are the bulk buyers and the major players in the marketplace, they have a role to play in the market. In terms of volume and turnover, they probably carry the bulk of it. So, and this could ultimately end up affecting them. So we shouldn't say that because the bulk of retail investors will not feel the impact of the capital gain tax, then not tend to the likely impact on these major players. Because I mean, If we have, say, 1,000 people participating in the market on any given day, and it happens that 10% of those 1,000 people, 10% of them are the ones doing 80% of market turnover, then you realize that you need to cater to the concern of those 10%. You don't say because they are not many in terms of numbers, you do not now pay attention to what they're doing, because they are not participating in the market could affect market volume as a whole. So we must give their concern good source.
I also understand what you're saying, and also using this opportunity to tell Nigerians that the stock market is such a legal, is a legal place where you can invest your money. Let's take a look at sector rotation, because I'm looking at what you sent to me earlier, your report on this Trump threats, as well as the issues weighing on the market. Let me talk about the sector rotation as it concerns what we've seen, at least in the past few days, sector rotations from industrials and consumer goods, perhaps even into fixed income. Do you think that what we're seeing is just, let me borrow your word, a tactical rebalancing, so to speak, from investors, or does it really reflect a deeper repricing of the market at this time? Perhaps the Nigerian equity risk versus real yields within the fixed income space.
There's a bit of both going on. If you look at it, those sectors that we're seeing investors rotating out of are the ones that have seen the most gains in the last, say, 1 quarter. All right, so the industrials, the food and the consumer goods, they are the ones that have really, seen significant gains. I will say even for 2025. All right, so it is natural that those are the ones that you are also going to see investors concentrating on when it comes to taking profit. Now, they might be taking profit from those sectors and going into other sectors that have not seen significant gains, or they could be rotating out of the equities market into fixed income, which is sort of to be expected now. You will see that with what the MPC is doing regarding rates now, there's a signaling that rates are likely to be heading downwards, which means that fixed income real yields that have been negative, say for the last few years, are tending towards being positive. So you could see that there are gains being taken from the equities market, and people positioning in the fixed income market as yields and interest rates starts to come down, and they want to take advantage of those positive gains in that market. It does not mean that in time, as some of the uncertainties which you are speaking about now starts to clear, people become a little bit more willing, if you will, to take risks. We've mentioned that typically December isn't the time where people tend to want to put money in investment, because there's so much consumption plans coming up towards the end of the year. The holiday season is coming and all of that, but at the beginning of next year, you could see a rotation back into risk, i.e. a rotation back into equities. So all that is going now are not things that are unusual for this period of time, regarding the historical perspective of what we've seen in this market for the last maybe a few decades.
Okay.
This is what is expected at this time.
Okay, Mr. Amolegbe, but let me try and ask you 2 questions. Though I have more questions to ask, but let me try and ask you 2 questions in one. And I'm looking at my book here, my jotter, where I drop all my thoughts into the year-to-date change. That is the year-to-date return. We've seen at least plus 45% for the market, which is not bad, for the year.
Very good.
Yes, from what we've seen last week, do you think that this correction is telling us that the equity story in Nigeria is fundamentally strong, as it were, or fundamentally even attractive? Or are we now entering an earnings compression phase? And let me put a caveat to this, especially with the kind of earnings that we're getting in from companies listed on the exchange. Last week, for example, I did talk about Zenith Bank. Zenith Bank's earnings, for example, other companies also releasing their 9 months earnings as we speak. So I would like you to talk about that. Then secondly, the MPC coming up in the next, perhaps in the next few days, in the week of 20-something. What do you think that the MPC would do, even though you've gradually alluded to the fact, that they are lowering interest rates now, but do you think that this Trump threat may add to, or may bring some kind of jitters to the MPC's decision in the next few days, as well as the Naira volatility? So do answer that question. And what is your outlook for this week?
Okay, so on your first question as to, are we entering an earnings compression stage? I do not think so. I think that it is important that investors look at, earnings regarding the sectors they are in at any particular point in time. If you look at the third quarter earnings released, what you saw was that the industrials, the consumer goods and all of that, those sort of companies saw fantastic returns. And it's to be expected because, what had led to their relatively bad results in the past was issues around FX revaluation losses and stuff like that, relatively high interest rates and all of that. Those same factors were the same reasons why you saw fantastic results being released by the banking sector, the financials at that time. What is happening now is that gradually, as the FX environment becomes more stable, some of these companies that have, significant FX inputs are stabilizing in terms of results. Their finance cost is also coming down, so you are now seeing them showing very good earnings. All right. Okay. On the flip side, you now saw the financials and the banking sector who either to have essentially benefited from that FX mislocation, if you will, are now also showing lower earnings results because that excessive returns or excessive earnings they've recorded from this from the earnings is not no more there, and the fact that their interest margin is also dropping because interest rate itself is also coming down. So we rather than look at the earnings compression in the market as a whole, it is best to look at it on a sectorial basis. So while you see some sectors showing improved earnings, some sectors are also are going to be on the flip side of that. Your
answer on MPC, just as we close, we have to round up your segment. What's your take?
I think that the MPC, I think the XCT will give consideration to global and macroeconomic issues, like they normally should do. But I do not think, again, that they are going to be basing their decision on that solely. Or for that matter, I do not think that might impact their decision significantly. I think they will continue to look at the global issues. As you mentioned at the beginning of this program, food prices have started trending downwards. We see interest rates also trending downwards. So I think that as they have signaled before, chances are that they will still continue to drop the policy rates, and I think that we are going to see that at this MPC. The policy rate is likely to come down.
Okay, let's thank you very much, Mr. Amolegbe. Thank you for your insights. I hope to talk to you soon. And of course, this insight has actually given our viewers some kind of nuggets to chew. Thank you very much. I'll see you soon. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.